Hello dear students, welcome to the third session on the chapter valuation of goodwill. Here in this session we are going to discuss about two questions under average profit method. So let us take up the first question now. Anna Limited proposed to purchase the business carried on by Azhar Limited. Goodwill for this purpose is agreed to be valued at 3 years purchase of weighted average profits of the past 4 years. They have given the year, profit and weights. Okay, on the scrutiny of account, the following adjustments to the profits are revealed. First one, during the year 2008, major repair was made in respect of plant incurring rupees 9,000, which was charged to revenue. It was agreed to capitalize this for goodwill calculation subject to adjustment of depreciation at 10% on diminishing balance method. Second one, closing stock of 2008 was overvalued by 3,600. Third one, to cover the management cost every year a charge of 7,200 to be made for the purpose of goodwill valuation. Calculate the value of goodwill of the firm. So let us analyze the question now. It is given that goodwill for this purpose is agreed to be valued at 3 years purchase of weighted average profits of the past 4 years. In the previous two questions, the goodwill was calculated on the basis of adjusted annual profit taking certain number of years purchase. But in this question, it is specifically given that we have to calculate the value of goodwill on the basis of weighted average profit taking 3 years purchase. Now, what is the meaning of weighted average profit? So, as usual, we have to calculate the adjusted annual profit, but later we have to multiply the appropriate weights given in the question. So, here they have given the appropriate weights are 1, 2, 3 and 4. Usually, the weights can be assigned either in the ascending order or in the descending order depending upon the profits given for those years. If it is showing a increasing trend, we have to assign in the ascending order. On the other hand, if it is showing a decreasing trend, we have to assign the weights in the decreasing order. But in this question, we need not worry about assigning weights because they have specifically given in the question. The same weights can be multiplied to the adjusted annual profits. Okay. Then let us analyze the adjustments given. On the scrutiny of accounts, the following adjustment to the profits are revealed. First one, during the year 2008, major repair was made in respect of a plant incurring rupees 9,000, which was charged to revenue. Okay, it was agreed to capitalize this for goodwill calculation subject to adjustment of depreciation at 10% on diminishing balance method. So here it is given that in the year 2008, what is the profit for the year 2008? 31,200. They had incurred a major repair costing rupees 9,000 in respect of a plant, which was charged to revenue. So here, what is the meaning of charging to revenue? They have debited that to the profit and loss account. When you debit an item or expense to the profit and loss account, what happens to the profit? Profit gets decreased. Okay, so here because of debiting this 9,000 in respect of a major repair of a plant in the year 2008, the profit of 2008 was reduced or it was decreased. That is 31,200 is the decreased profit. But now what has happened? For the purpose of valuation of goodwill, they have decided to capitalize this. Capitalizing an expenditure is nothing but earlier when they charged it to the revenue, they had treated it as a revenue expenditure. That is why they have taken it to the profit and loss account. But now they want to capitalize it, nothing but they want to treat it as a capital expenditure, nothing but you are as good as you are purchasing additional plant. Okay, so now for the purpose of goodwill valuation, you are considering that you have purchased plant worth rupees 9,000 in the year 2008. Then what is the extra adjustment you have to do here? Subject to adjustment of depreciation at 10% on diminishing balance method. Earlier, this depreciation was not required because it was a revenue expenditure. But now when you are treating it as a value of plant purchased during the year 2008, you have to charge depreciation at the rate of 10% on diminishing balance method from the year 2008. Okay, and it is given that which method of depreciation you have to follow? Diminishing balance method. That is, on the reduced value of the plant you have to charge the depreciation for the respective years. Okay, so now for the year 2008 you are purchasing plant worth rupees 9,000 and they have not given as to when this major repair was incurred, whether it is beginning of the year or middle of the year or at the end of the year. It is not specifically given in the question. The date of incurring the major repair is not given. So you can assume that the major repair was incurred at the beginning of the year, so that you can charge the depreciation from the month of January till December. For the entire year you can charge the depreciation. So now how to calculate the depreciation for the year 2008? 9,000 into 10%, which comes to 900. So that is the depreciation for the year 2008. Then the next year, that is 2009, you have to follow diminishing balance method. So how do you calculate? 9,000 minus 900, you get 8,100. On that you have to calculate 10%, which comes to 810. Okay. Then again in the year 2010, you have to take the reduced balance. 8,100 minus 810 is equal to, you will have a balance of 7,290. On that you have to take 10%, which comes to 729. So this calculation of depreciation has to be shown in the working note. Let us see how to show that working note. So you will write calculation of depreciation. You can write that you are assuming that the major repair expenses was incurred at the beginning of the year. 2008, on 9,000 you are charging 10%, which comes to depreciation of 900. 2009 you have to take the reduced balance, diminished balance. 9,000 minus the depreciation of 900 in the previous year, you will have balance of 8,100. On that 10%, which comes to 810. The next year, that is 2010, 8,100, this balance minus the depreciation of previous year 810, which comes to 7,290 into 10%, 729. So these are the depreciation for the year 2008, 9 and 10, which has to be adjusted to the profit and loss account. So now what is the adjustment required with regard to this depreciation, whether it should be added or it should be deducted? See, earlier they had taken it as a revenue expenditure, so they had not provided for depreciation. But now when you are considering it as a value of plant purchase, you have to provide the depreciation. That means you have to deduct it from the profit of 2008, 2009 and 2010. So that is regarding the first adjustment. We have to show two adjustments. The first one, that is the value of 9,000 rupees capitalized, you have to add back to the profit of 2008, because you are considering it as a value of plant purchase. Earlier they had deducted, so you have to add back. Then the second adjustment is, earlier the depreciation was not provided, but now when you are considering it as a value of plant purchase, you have to provide for the depreciation, so you have to deduct it. That is regarding the first adjustment. Now let us take up the second adjustment. The closing stock of 2008 was overvalued by 3,600. When you come across this kind of adjustment, it is not just one adjustment, because the closing stock of the year 2008 is going to be the opening stock for the year 2009. So if you are overvaluing the closing stock of 2008, which means that you have also overvalued the opening stock of 2009. Again, in this second adjustment also, there are two adjustments to be considered, and you have to make the adjustment to the profit and loss account. So now let us analyze how the overvaluation of closing stock affects the profit, whether it increases the profit or it decreases the profit. Let's say you are preparing a trading account here. Where do you show the closing stock? The closing stock is always shown on the credit side by way of writing by closing stock. Please remember, whether you are writing an item in the credit side of the trading account or in the credit side of the profit and loss account, if you increase the amount here or if you overvalue the amount, it results in increase of profit. Okay. On the other hand, if you decrease the amount or if you undervalue an item, it decreases the profit. So if you show more of the item or more credit or increased credit, that will result in increased profit. On the other hand, if you decrease the amount or if you undervalue the closing stock or any other item which you write on the credit side, it decreases the profit. So now what they have given here, in the year 2008, the closing stock was overvalued. Let us say the actual value of the closing stock was only 50,000. But you have written it as 53,600, because of which the profit for the year 2008 was increased, okay, because it is an item which you are showing in the credit side that adds to the profit. So because of this 3600 overvaluation of closing stock, the profit of the year 2008 was increased. So now what is the adjustment you have to do? You have to deduct 3600 from the profit of 2008. So that is the first adjustment. On the other hand, the second adjustment, as I said, the closing stock of 2008 is nothing but the opening stock of 2009. So let us take up the same format here. Opening stock is shown in the debit side. So you, by way of writing, to opening stock. The rules will be reverse, okay. So here in the credit side, I said if you show more, then the profit will be more. If you show less, the profit will be less. Quite reverse to that. On the debit side, if you show more of the item or increased or overvalue of an item, that decreases the profit, because whatever you write on the debit side, that adds to the expenses. It is as good as you are writing that the expenses are more, which decreases the profit. So if you overvalue an item shown in the debit side of the trading account or in the profit and loss account, that decreases the profit. Profit will be decreased. On the other hand, if you decrease or undervalue an item which is shown in the debit side, that increases the profit, because you are showing that expenses are less. I will again tell you the rules here. Coming to the credit side, if you overvalue, profit will be more. If you undervalue, profit will be less. Coming to the debit side, any item for that matter, here we are taking the example of opening stock. If you overvalue, then the expenses are more, obviously the profit will reduce. On the other hand, if you undervalue, you are showing that expenses are less, because of which the profit will be more. So now what is the situation here? During the year 2009, while writing the opening stock, you have overvalued the opening stock. Nothing but you have shown that expenses were more in the year 2009, because of which the profit of 2009 was decreased. Okay. Now what is the correction you have to do? You have to add back this 3600 because of overvaluation of opening stock to the year 2009. Okay, I will once again tell you what is the adjustment required in this case. Overvaluation of overvaluation of closing stock in the year 2008, because of which the profit of 2008 was increased. Now you have to decrease it. The other adjustment relating to this is overvaluation of opening stock of 2009, because of which the profit was reduced. So now you have to add back to bring that to the normal level. Okay, so this is the adjustment with regard to second one. Then coming to the third one, to cover the management cost, every year a charge of 7,200 to be made for the purpose of goodwill valuation. So far, while preparing the profit and loss account and arriving at these profit, they have not shown management cost in the profit and loss account. But now for the purpose of goodwill valuation, they have decided to provide for this management cost every year. So you have to deduct this management cost from the profit of each year, that is 2007, 8, 9 and 10. So after considering all these adjustments, we are going to calculate the value of goodwill. So here, what are the steps we have to follow? Coming to the first step, we are going to calculate adjusted annual profit by adjusting all these adjustments given in the question. In the second step, we are going to calculate weighted average profit by multiplying the weights. Okay. And then in the third step, we are going to calculate the value of goodwill. Let's see how the solution has to be done. As I said, first we are going to show the working note with regard to calculation of depreciation. This is the working note. Then coming to the first step, that is calculation of adjusted annual profit. So we have to prepare it in a table. First we will be writing profit as given. 2007 30,300, 2008 31,200, 2009 36,000, 2010 45,000. Then according to the adjustments given in the question, first adjustment was that earlier 900 rupees was treated as a revenue expenditure. Now for the purpose of goodwill valuation, you are considering it as a capital expenditure. So earlier you had deducted it from the profit. So now you have to add back. So that happened in which year? 2008. Okay, so you have to make the adjustment only to the profit of 2008. You have to write that add major repair wrongly taken as a revenue expenditure, now capitalized for goodwill purpose. So you have to write that only in the 2008's column. After that, you are going to have the balances 30,300, 40,200, 36,000 and 45,000. Please remember one thing here, while arriving at the profit you have to be careful. Sometimes what students do is that they write it as add, but while arriving at the balances they deduct and write the amount. Don't do that. You have to be careful what you have written here. If you have written add, please add that to the balance. If you have written less, you deduct it from the profit balance. Now, coming to the other adjustment which is relating to the first one, the depreciation was earlier not charged because it was taken as a revenue expenditure. Now you have to provide for the depreciation starting from the year 2008. Okay, less depreciation at 10% on diminishing balance method, 900, 810 and 729. So these are the balances to be deducted. Again, you are going to have the balances 30,300, 39,300, 35,190 and 44,271. So we have completed with the first adjustment. Coming to the second adjustment, that is the overvaluation of closing stock in the year 2008 that led in the increase of profit in the year 2008. Now what you have to do, you have to deduct it. Less overvaluation of closing stock, you are writing in 2008's column. So 3,600, you are again going to have the balances 30,300, 35,700, 35,190 and 44,271. The other adjustment relating to this was overvaluation of opening stock in the next year. In the next year is nothing but 2009. So because of overvaluation, the profit had decreased in the year 2009. To correct that, you have to add back the amount to the profit. So add overvaluation of opening stock, you have to write in 2009's column the next year. So 3,600, again you are going to have the balances of all the years. And the third adjustment says that we have to provide for management cost of each year 7,200 each has to be deducted from all these profit. So then you are going to arrive at balances which is called adjusted annual profit for the year 2007 23,100, 2008 28,500, 2009 31,590, 2010 37,071. So we have completed with the first step. Then let's see the second step. So here we are going to calculate weighted average profit. So again we are going to prepare it in a table. Year, adjusted average profit as we calculated in the first step, then weights. Then the last column, weighted profit. So when you are going to multiply adjusted annual profit with the weight, you will get weighted profit. Coming to the year 2007, the profit, adjusted profit is 23,100 into the weight is 1, which comes to 23,100. 2008 28,500 into 2, it comes to 57,000. 31,590 into 3, 94,770. 37,071 into 4, which comes to 1,48,284. After this, we are going to calculate what are the total weights multiplied, which comes to 10, and what is the total weighted profit, 3,23,154. In the next line, we are going to calculate what is the weighted average profit. The formula is total weighted profit divided by total weight. So here total weighted profit is 3,23,154 divided by what is the total weight assigned, 10. So when you divide it, you will have weighted average profit of 32,315.4. Then the last step is for the valuation of goodwill. Value of goodwill is equal to weighted average profit into number of years of purchase. 32,315.4 into 3 years purchase is given 3 times. So which comes to the value of goodwill at 96,946.2 approximately. You can write it as 96,946 rupees. Okay. So this is how we prepare the solution for the first question. So now let us take up one similar question with little changes. Okay, let's take up the next question. Daya Limited proposed to buy the business carried on by Maya Limited. Goodwill for this purpose was agreed to be valued at 2 years purchase of the weighted average profit of the past 4 years. Again, very similar question. The appropriate weights are 2009 1, 2010 2, 2011 3, 2012 4. Again the weights with regard to these years they have specifically given in the question. The profits for these years were 2009 20,000, 2010 25,000, 2011 30,000, 2012 46,500. On the scrutiny of accounts, the following adjustments to profits was revealed. First one, on 1st July 2010, rupees 2000 repair expenses paid for routine repair was capitalized. Depreciation at 10% on plant was provided under diminishing balance method. Second one, during 2012, profit on sale of furniture amounted to 1500. Third one, closing stock of 2008 was undervalued by 5000. Additional amount of 2000 per year should be provided to cover the management cost. Calculate the value of goodwill of the firm. So now let us analyze the question. Here again it is given that we have to calculate the value of goodwill at 2 years purchase of the weighted average profit of the past 4 years. So we have to follow the same step. First step we are going to calculate adjusted annual profit. Second step we are going to calculate weighted average profit, and third step we are going to calculate value of goodwill. And the weights are specifically given 1, 2, 3 and 4. Profits are given as 2009, 20,000, 2010, 25,000, 2011, 30,000 and 2012, 46,500. On the scrutiny of accounts, following adjustment to profits were revealed. First one, on 1/7/2010, that is on 1st July 2010, rupees 2000 repair expenses paid for routine repair was capitalized. Depreciation at 10% on plant was provided under diminishing balance method. Okay, this is the first adjustment. So this adjustment is quite reverse to the first adjustment of the first question. Okay, so let us analyze now. This repair expenses was incurred on, the date is given 1/7/2020, nothing but in the middle of the year they have incurred this expenses. So rupees 2000 repair expenses paid for routine repair was capitalized. It is a routine repair means which is recurring in nature, which has to be actually considered as a revenue expenditure. But earlier they had capitalized it, okay, which is a wrong entry or wrong adjustment made to the profit and loss account. They had to treat it as a revenue expenditure because it was a routine repair. So now what is the correction you have to do? Earlier they had not deducted it from the profit and loss account because they treated it as value of plant purchase. So they have added it to the value of plant. They did not show any entry to the profit and loss account because they have not taken it as a routine repair. Now you have to consider it as a routine repair, taking it as a revenue expenditure. So what you have to do, you have to debit that to the profit and loss account. So this is the correction to be made. Earlier they had not deducted it from the profit. Now you have to deduct it. How much rupees? 2000 rupees has to be deducted from the year 2010. Okay. Then what is the other adjustment required here? When they capitalized it in the year 2010, they had charged depreciation at 10% on diminishing balance method on the value of the plant. From the year 2010, they have started charging the depreciation. 2010, 2011 and 2012, they have already charged the depreciation because they considered it as a value of plant purchased. But now when you are treating it as a revenue expenditure, can you charge the depreciation? No. Earlier whatever charged, you have to correct it by adding back the depreciation. So now how to calculate the depreciation? Let's see the calculation in the working note. First year, that is 2010, it is specifically given that the routine repair was incurred on 1/7/2010. So you have to charge the depreciation only from July to December. Only for 6 months you have to charge the depreciation. The amount of repair was 2000 into 10% into 6/12. The depreciation comes to rupees 100. Okay. Then when you're calculating for the year 2011, it should be on the diminished balance. 2000 rupees routine expenses minus 100, it comes to 1900 on that for the full year. Okay, January to December, 10% you have to charge, which comes to 190. Then in the year 2012, 1900 minus 190, which comes to 1710 into 10%, which comes to 171. So these are the depreciation which were already deducted from the profit, thinking that it is the value of plant purchase. But now when you are treating it as a revenue expenditure, you cannot charge the depreciation. Whatever earlier charged, you have to correct it by way of adding back. Okay. So earlier you had deducted it. Now you have to correct it by adding those depreciation amount to the profit of 2010, 11 and 12. So this is the first adjustment required. Then coming to the second adjustment, during the year 2012, so what is the profit for the year 2012? 46,500. Profit on sale of furniture amounted to 1500. While discussing the theory itself, I have told if there is a profit or loss on the sale of fixed asset, it cannot be taken to the profit and loss account because it is non-operating and non-recurring in nature. So in the year 2012, there was a profit on sale of furniture which was credited to the profit and loss account, because of which the profit of 2012 was increased. So now what is adjustment required? You have to deduct it from the profit of 2012 to bring it as a to the normal level, normal operating profit. Okay. Then the third one, closing stock of 2008 was undervalued by 5000. Again similar adjustment when compared to the previous question. So, but there it was overvalued, but here it is undervalued. Okay. Closing stock of 2008 was undervalued by 5000. Let us consider the similar format of the trading account. Okay. Closing stock was undervalued. So as I said, if you decrease the amount which you write in the credit side, that decreases the profit. So now if you want to correct it, what you have to do, you have to add back to the profit of 2008. But if you see here, have they given us profit for 2008? No, they have not given. They have started with the profit of 2009. So this part of the adjustment is not required. You are not going to show the adjustment of adding back to the profit of 2008. But the other adjustment you have to consider, that is closing stock of 2008 is nothing but it is the opening stock of 2009. So opening stock of 2009 was undervalued. So as I said in the previous question, if you show decreased amount on the debit side, you are showing that the expenses are less, because of which the profit was increased in the year 2009. Now if you want to correct it, what you have to do, you have to deduct it from the profit of 2009. Okay, so this is the adjustment, one adjustment which is required. Then additional amount of 2000 per year should be provided to cover the management cost. So this adjustment has to be made to the profit of each year, that is 2009, 10, 11 and 12. So these are the adjustments to be shown in the first step. So let's see how to prepare the table in the first step. Calculation of adjusted annual profit, profits as given, you have to write. Then the first adjustment, that is repair expenses, earlier which was taken as a capital expenditure, now we are going to treat it as a revenue expenditure, so it should be deducted from the profit of 2010. Okay, you have to deduct it. So you will have the balances. Then again the other adjustment was, earlier when they treated it as a capital expenditure, they had deducted the depreciation, but now when you are treating it as a revenue expenditure, what you have to do, you have to add back the depreciation amount which you have already calculated in the working note, but that starts from the year 2010. Then the other adjustment, second one, profit on sale of furniture was there in the year 2012, because of which the profit was increased. Now you have to correct it by way of deducting it. Okay. Then the next one, there was a undervaluation of closing stock, but the profit for 2008 is not given. So we are considering the other adjustment, that is undervaluation of opening stock, because of which the profit of 2009 was increased. Now you have to correct it by way of deducting it from the profit of 2009. Then the other adjustment is to provide for the management cost from the profit of each year by way of deducting it. So we will arrive at adjusted annual profits. Okay. Then the second step is for the calculation of weighted average profit. So you are going to write the various years given in the question, then the adjusted annual profit as we calculated in the first step, and also you are going to write the weights. Then you are going to multiply the adjusted annual profit with the appropriate weights given. So you will get the weighted profits, and then you will calculate what is the total weights assigned and what is the total weighted profit. In the next step, in the next line you are going to write weighted average profit. The formula is total weighted profit divided by total weight, 3,12,454 divided by 10, which comes to 31,245.4. The last step is for the calculation of value of goodwill. That is, value of goodwill is equal to weighted average profit into number of years of purchase, which comes to 31,245.4 into 2. The value of goodwill is 62,490.8, which is approximately 62,491. Okay. So these are the two questions which we have discussed under average profit method. So in the next session I am going to take up the second method, that is super profit method. So Let us meet up in the next class.